Howdy there, folks. Hope everybody's doing great out there as always. Today we're going to talk about three stocks. We're going to talk about Peloton. We're going to talk about Beyond Meat. We're going to talk about Lemonade. We're going to talk about Teledoc. Okay, we're going to play a game today called Cry or Buy, which is essentially, do I feel like these stocks are buys now? I think all these stocks are honestly right at their 52-week lows literally today as of recording this. Or are they more just cry and don't buy? Or you're going to buy and cry, okay? By the way, I'm here, just so you know. You can't see me because I can't afford a camera because, you know, the market's been kind of like rough lately. But look it, okay? I swear I'm here. See? Hi! Okay, I'm here. It's for real. It's just, you know, it's been a rough past, let's call it month or so nonetheless, okay? So let's get into this, guys. I hope you guys enjoy this as always. And don't forget to hit that subscribe button if you're not subscribed to this channel, Financial Education 3. We are getting really dang close to 100,000 subscribers on this channel, like insanely close. And so, yeah, I just want to say, well, let me put the camera back on just for a moment, and then I got to shut it back off, okay? Appreciate you guys being here. Thanks for being here. Much love as always, and thanks for being subscribed, okay? Alrighty, guys, so buy or cry. Peloton. So this is a stock I used to be short. I covered my short way too early. I took a profit and ran. Like most things in life, the first time you do anything, you don't do it the best, okay? And so I shorted the stock. It went well. I made money on it, but I covered so early, like way too early. I knew the stock was going to get devastated. It's just, I got, let's call it a panic cover, basically, where it's just, I looked at this one and then I was like, oh, I'm up money and I don't know, it could go bad. I'll just cover. And I never short stocks. So I'm like a little baby in that one. And when it comes to Peloton, this has just been a business model I've never liked, to be quite frank. Obviously they sell exercise bikes. First off, there's a very, very limited amount of people that like to use exercise bikes, right? Never mind that, there's even a bigger limited amount of people that want to use an exercise bike at their house. Most people prefer to actually go to a gym. Even, probably even like people like myself that are more introverts. We even like to go to the gym for the most part. So it's just a very, very, very niche market. And the problem is, we've never seen an exercise company have major success. And so Peloton basically is trying to be the first company to ever have major success in the hardware market when it comes to exercise equipment, right? And I know they have their subscription plans, and they're in my opinion, giving themselves the best chance to have success of any company I've ever seen in the space. But at the end of the day, it's still a $12-13 billion company even after this dramatic fall it's been on. Remember, this is a $171 stock at its 52-week high. 171. Run the percentage on down, right? If the stock was at, $85.50 or whatever, that would be down 50%, okay? And it's down another 50% plus from that number, right? So I mean, we're talking about, this is like a 75%, if not a 80% fall from, I think around 75% ish from its 52-week high. That's insane, right? It's absolutely insane. But nonetheless, this could easily go down to like a $5 billion, $6 billion type market cap. I know, as crazy as that sounds, it's definitely a possibility. Remember, at the end of the day, this is a hardware company selling fitness equipment, and these businesses, they go through some nice peaks. And Peloton, that's the problem. Like, Peloton reached its peak in 2020. It never gets better than that, right? It only goes down from here. That was like everybody had to be at home. Peloton's brand was at an all-time record high. Its interest was at an all-time record high. And now essentially it's not that way anymore. So yeah, I don't feel like this one's a buy, even though I'm somebody that loves beating down dog stocks. I feel like if anything, it's a cry. That's Peloton, okay? Next one up here, BYND, Beyond Meat. So Beyond Meat, $64 here today. 52-week high on this one is $221 for Beyond Meat. It's been a tough year for Beyond Meat. Very, very tough year. A lot of missed numbers. A lot of it's been bad. I've looked over every single quarterly report they've had. I've listened to, I think, three of the past 4 conference calls in this company. And it's a company that has had some trouble innovating, just to be quite frank, over the past 12 to 18 months. They have felt very, very stagnant with their products. They try to come out with a chicken product. I've tried the one that they sell. I got to say, Impossible is destroying these guys. I've taste tested everything, and it's like night and day. Impossible is just beating these guys. And that's tough for me to say because Beyond Meat's a stock that I really liked when it came out. It's just they weren't innovating. And when you don't innovate and you're a high-growth company, or a high-valuation company, I should say, you can't be in it. And so that's why I moved my money over to the Chef. And the Chef hasn't done much, obviously, right, in terms of the stock price. But I can tell you the Chef has massively outperformed Beyond Meat. So I had to move my money to a company that I felt was innovating at a much, much more rapid pace. And it's not even close between, somebody like the Chef and Beyond Meat in terms of their innovation. I keep track of both these companies on a very high level, obviously, right? So Beyond Meat is, I think it's still, I would call it a barely buy for long-term investors. That's how I kind of feel. I feel like it's more of a buy than a cry. However, you got to understand in the stock, they have the most serious competitive threat of anybody, and I think it's Impossible Foods. And I think honestly, Impossible Foods is going to be exponentially bigger than Beyond Meat. Like I said, I've tried both companies' products. I see the way Impossible is innovating, and Beyond Meat has some great partnerships with some fast food chains and things like that, but that could easily go away very, very quickly. So they have a great brand name. They're expanding. I think it's more of a buy than a cry. However, don't be surprised if this one still continues downward for the next few weeks. Remember, this is a stock that not just individual investors are down huge on, but a lot of funds and institutions. So it's not out of the realm of, and hedge funds and whatnot, it's not out of the realm of possibility for more tax loss harvesting to come over, to basically happen with the stock over the next 1 to 2 weeks before the end of December, if not the next 3 weeks, right? And so keep in mind, if you're buying this stock, you could also get some much lower entry points over the next few weeks. But I think it's more of a buy than a cry in this one. So yeah, that's Beyond Meat. I like it. I just don't love it because they just haven't been. I don't know what happened, man. The company went public. A lot of excitement, a lot of new SKUs, a lot of products, a lot of partnerships. And then it seems like after they went public, the company just went stale. I hate to use a bad food expression, but the company just went stale. And, that's one of those decisions you have to make sometimes. And for me, when I got out of Beyond Meat, it was a tough decision. But at the end of the day, like if a management team's not cutting it and they're not innovating and you've got a big valuation on it, you got to run out of those stocks because they're due to get devastated. And that's exactly what happened with this stock, obviously, right? So yeah, that's Beyond Meat. I think it's more of a buy than a cry for long-term investors, that is. Lemonade, LMND. All right, so Lemonade, obviously insurance company, just got into car insurance very recently here. And overall, they want to become an insurance giant. And the business model, they're basically using artificial intelligence and real-world data that they can get. And the way they do their pricing is very, very different than traditional insurance companies. And traditional insurance companies, they can't really fully switch to a business model like Lemonade. Or what they're going to end up finding is they're going to have to essentially lower prices on a ton of their customers, which would not be good for them because if they lower prices on a ton of their customers, they're going to make less money, right? So that's a really tough decision. Or they're also going to find they're going to have to raise price on a bunch of customers, which is going to make those customers go to somewhere else. So the traditional business models are in a pretty tough place in this industry, and it's going to make it difficult, and not impossible, let me be clear about that, but it's going to make it difficult for big-time insurance companies, the big dogs of today, to transition their business models to something that will replicate a Lemonade, okay? So Lemonade's in a pretty, I don't want to say sweet spot, that sounds like puns intended there, but it's in a pretty good spot for the next, let's call it 1 to 2 decades, right? They should put up very, very nice growth for the next 1 to 2 decades. However, like these other stocks, remember this one? We looked at Beyond Meat here. I don't know why my little thing's not working here. Beyond Meat, what? Okay, I guess nothing works on this page anymore. Okay, well, Hello? Okay, whatever. It won't let me click on Beyond Meat. I guess we can't literally go, but look at this. I click on it. Nothing happens. Well, whatever, okay? It's like, look at this. Look at it. No, we're not allowed to even look at Beyond Meat anymore. Maybe I've changed my mind on Beyond Meat. It's more of a cry than a buy, okay? But anyways, what I was going to show you guys is no P, no forward P on Beyond Meat, on Peloton, and on Lemonade. And to be quite frank, especially in regards to Lemonade, I don't know when there's a forward P on Lemonade. It honestly could be many years away, guys. Okay, this one I don't think's very, very close to profitability. And so you might not expect profitability in this one till maybe 2024. Okay, and so when you're that far out from profitability, you're going to have some major shakeups here in the short term. And I think there could continue to be shakeups in the short term. And Lemonade, remember, by the way, the market cap right now is in the $2 billion range. I think on Hungry Bull, we're lagging our market caps by a day or so. It's actually in the $2 billion range here today after this 7.7% downward move. But in regards to a stock like Lemonade, a lot of funds own that one. A lot of hedge funds have been playing this one. Everybody's down on the stock. No one's up on the stock, right? 52 weeks high, $188. Everybody's down on the stock. Perfect stock to tax loss harvest. Everybody's looking at this one. They're like, dude, it's probably going to be lower in January anyways. I'll pick back up the shares in January. And so that's a tough part of Lemonade. I feel like this one's closer to a buy than a cry for folks that have a 5-year time horizon. However, you got to understand this one could be tough sledding for the next 12 to 18 months, just for the mere fact that, once again, there's no profitability expected anytime soon, and folks are going to, look at these numbers and look at these losses and be like, oh my gosh, man, these losses are massive. The negative cash flow for this company is going to be, pretty rough. Let's just put it that way for a while. And so do keep that in mind with Lemonade. This is one of those stocks. Hey, look we went back to Beyond Meat. Oh, there we go. Okay. Beyond Meat wants to try to get our attention again. But in regards to Lemonade, when you're in that position, it's tough. And 52-week low 40, I wouldn't be surprised if it tanks lower than that. So yeah, Lemonade closer to a buy than a cry. However, if you buy this one today, you might be crying a little bit more over the next few weeks. Let's just put it that way. Okay. The good news is tax loss harvesting there's not much time left. There's only about 3 more weeks. So that's the only good news there, okay? Which seems like eternity sometimes in the stock market. Teledoc, T-Doc. So obviously this is one that's a big Cathie Wood play, usually our second or third biggest position in the ARK fund. Great long-term story in regards to Teledoc and kind of being the telehealth company of the future and the today, to be quite honest, okay? And when it comes to Teledoc, this is one of those companies that I think grows, I don't know when Teledoc stops growing, but that's fair to say in regards to most of these companies, right? Same thing with Lemonade. Like, I don't know when Lemonade stops growing, but it's no time soon in terms of growing their revenues, right? Beyond Meat, they should get back to nice growth in 22. Not the biggest growth engine. Peloton, that's a little different. Okay, that one could probably see revenues go down, and if not down in a pretty big way over the next year. Okay, so that one I don't want to put in the same category as these other stocks. Okay, it's kind of like Peloton. Lamest growth. You can actually probably it'll be negative numbers. Beyond Meat should have growth, but nothing too crazy. Lemonade should have strong growth. Teledoc should have strong growth, okay? And when it comes to T-Doc, I feel like this is more of a buy than a cry. However, do keep in mind that prior to Rona, this was a $50 stock, okay? This is really, really important to understand. Before Rona, this was a $50 stock. Now, because of Rona, that obviously, took everything into the future, right? Everything that was going to play out, so services like Zoom, basically overnight became much more relevant. A company like Teledoc became much more relevant overnight, right? And that's a game changer for their business. Also, do keep in mind they also bought Livongo, which is also a big, huge acquisition. So the fact is, when I look at a company like Teledoc, it deserves to trade higher than it traded prior to Rona, right? When it was a $50 stock. The big question is, how much higher does it deserve to trade? In my opinion, I think anywhere between $75 and $95 is a pretty fair range for somebody that's a long-term investor that has a 5-year time horizon. Like anywhere between 75 and 95, I think is very, very fair for this stock. If it was to ever go Under $75, I don't think that makes much sense, and that's kind of, I think, more of a a loading of the boat opportunity if the stock was to ever go below $75, because then all of a sudden, if you start talking about going down to 60, 50, all of a sudden you're like, oh, you're back to where the stock was prior to Rona. Doesn't make much sense, right? I mean, considering this company has had their revenues in awareness. They're, everything's been pushed way ahead, right? They'll get to profitability faster than they would have if Rona never happened. So the fact is, Teledoc it looks like a company that's in a prime position to be a huge long-term winner, okay? But nonetheless, I mean, it's going through a really tough time, and there's not going to be profitability here anytime soon. Long-term, it will likely be a profit machine. I can definitely see this business setting up as a business model that will be a profit machine. But just keep in mind, that's still a while away. Because even when they start to get to profits, it's not going to be like, oh, wow, they're making bank. It's going to be like, oh, now they make like 10 mil a year. And then it's like, oh, now they make 30 mil a year. Now they make 50 mil a year. Now they make 100 mil a year. And then it starts kind of boosting up. But, this is we call it a super long-term play. That's why it's a Cathie Wood company, right? It's an innovator. It's a disruptor. And we need disruption in the healthcare sector. I can tell you that much. And they're in a prime position for that. So, I would call them much closer to a buy than a cry. So hope you guys enjoyed this. Let me know if you enjoyed this little series here. We can do this on stocks like this in the future. Stocks that are at 52-week lows, buy or cry. Let me know what you guys think about these 4 stocks. Are they buys or are they cries? Let me know, guys. Much love as always. Don't forget to subscribe. Hit that subscribe button and have a great day.